Hello, everyone. I'm Miguel Morel. I'm the founder and CEO of Arkham Intelligence, which is a blockchain analytics company focused on de-anonymizing the blockchain. Today, we're going to be talking about the new TA and the future of crypto trading, this being a play on words of technical analysis, the previous TA. And we're going to be discussing transaction analysis today, which is what we focus on. So traditional trading uses two kinds of information. The first is asset fundamentals, and this is what we describe as things such as balance sheet data, fundamentals about a project, things like central bank policy, Fed rates, et cetera, and using this as a type of information in order to be able to gather due diligence about what sort of assets you should be investing in. The second is price data. So this is what people traditionally use whenever they're doing TA and technical analysis. This is looking at support levels of different charts, looking at the different patterns that are being drawn within a chart in order to decide whether an asset is due to go up or down. Things like historical benchmarking, so that being actually analyzing how an asset has performed in the past in order to determine how it's likely to go in the future. And then other things such as regression analysis to determine very similarly what the historical behavior of a particular asset is in order to then predict the future about where it's about to go. What Arkham focuses on is a little bit of a different category, and this is transaction data. So this actually means what transactions are occurring on chain and using this information in order to determine what is likely to be going on in the market. So this includes looking at what we describe as entity positions. So this is what positions people are currently holding, different forms of whales, for example. New entrants into a particular market. So this is new kind of information, such as when people are buying Bitcoin or Ethereum or a different kind of asset for the first time. Things like large transactions, which are typically known as, let's say, something like a whale alert. So whenever there's a new kind of large movement occurring within the market, using that information to determine whether or not that means there's been a fundamental change. Insider activity. So this is looking at things like insider teams, investors, et cetera, to determine what it is they're doing with their tokens in ways that might impact the price. Exchange in and outflows. This is also a very popular form of transaction analysis in order to determine the general flow of whether people have been purchasing or selling on a large scale. Now, the issue is that this information is typically guarded by brokers, exchanges, and regulators. For example, in the stock market, it's very difficult to understand what positions people have in real time. Very frequently, you will need to wait something like 90 days for a large position to be disclosed in the case where that person holds a large amount of a public stock, or they themselves are a very large investor and therefore they need to disclose their positions. The good thing about crypto is that all of this information, because it's on chain, is actually just available for people to analyze. However, by default, even though the information is discoverable, that doesn't necessarily mean that it's usable. If you were to just look at the raw, let's say, Ethereum blockchain or Bitcoin blockchain, you would have no idea who it is that's actually making these purchases or making these sales or making these deposits or these transactions. So that makes the data incredibly difficult to use. What we've determined is that the future of crypto trading actually lies in being able to understand more about who it is actually making these transfers and transactions, who is making the purchases, and who is making the sales as a way of performing risk management and other kinds of due diligence in your course of crypto trading and investing. So what is it that we're trying to understand exactly? What we're trying to understand is who are the different kinds of market players who are making the transactions that impact the market. So one of the steps that Arkham actually takes is attempting to identify all of the different types of players within the cryptocurrency industry. This includes things like token projects, project insiders, market makers and liquidity providers, retail investors and traders, governments, regulators, media, VCs, and institutional investors. All of these players play a very important role within the cryptocurrency ecosystem. And if you've been caught up on the news or Twitter recently, you might have even seen several news stories about Arkham having identified different types of these entities and then disclosed their relationship with different kinds of crypto assets as a way for investors to actually be a lot smarter about what it is that they're investing in, and out of the projects that they are invested in, what it is that the major projects or players that are involved in that particular asset, what it is that they're actually doing with their tokens as a way of due diligencing your investment. So what exactly does this mean and how does it work? The way Arkham works fundamentally is that we've built a platform that is able to analyze blockchain addresses across many different chains. This includes, for example, Ethereum or Bitcoin or Tron or Solana, where then we're able to take the information about the different kinds of addresses and who own them. You take that info and you tie the addresses together to one another as part of an entity. And then from that entity, you see how the entities interact with one another. So looking at the example on the right-hand side, you're able to see, in this case, jump trading. So this would be an example of a large market maker and a large trading firm, where you could then see across all of their different addresses what the exact makeup of their portfolio is in real time and how it is that they're making all of their different transactions. So how is it that we are able to do this at Arkham? Well, we start out the same as everyone else, which is with pseudonymous blockchain data. We take all of this raw information, we process it. This then goes to a data science and engineering team in order to do what we call entity classification. This is actually the matching of different addresses to particular entities. Even if we don't necessarily know who those entities are, it's very helpful and useful to actually know which addresses belong to the same person versus those that belong to different sets of people. To give you a hypothetical situation, imagine you have a set of 10 addresses, all conducting very interesting transactions on the Ethereum blockchain. How do you know if those addresses, say you have a set of 10, are owned by 10 different people versus one person who owns all 10? Even if you don't necessarily know who the entity actually is, it's very useful to understand whether or not these are all independent behaviors and independent transactions, or if they're all somehow related and correlated with one another. And then at the end, for the user, we actually produce a platform where you can see all of the information in a single place. This is what we consider to be an advancement of financial data. Initially, all of this sort of information was not stored. In a barter economy, for example, whenever you were to barter something and trade something with someone, say you would take a vase and exchange it for a table, there would be no centralized registry of who it was that actually conducted that transaction, the way it settled, or what it settled for. This then all moved on to different kinds of stock market trading, where then you actually have a centralized ledger of all of the different stocks and who exactly it is that is trading them. And this would actually be traded in person within the actual areas of the stock market and the trading desks. This then moved on to purely electronic trading, where everything is monitored and tracked in real time. But as I described earlier in the talk, it is guarded by these different kinds of brokers and exchanges. And now at the end, the most sort of realized vision here is all of the information being public for everybody to be able to see it in a very transparent way in order to cause significantly more efficient markets. So let's look at a particular case study for how this sort of information works. In this case, we'll be looking at the Bitcoin ETFs. Here we have examples of all the different kinds of famous ETFs that exist for Bitcoin. Now, all of these different kinds of transactions will generally occur within, let's say, traditional financial players and within their centralized ledgers, or even on the stock market, in a way that is not released to the public until there's a particular filing. The amazing thing about it being in crypto is that we are actually able to analyze these inflows and outflows of these ETFs in real time, which means we no longer have to wait for somebody like a Fidelity or a BlackRock or a Grayscale to actually give us the information. We can just see it as soon as it is actually produced on chain, and then this automatically gets uploaded to our platform for all traders to be able to see. This is an example of a visualization of the inflows and outflows of different kinds of ETFs into, in this case, grayscale. In addition, if we were to look at another case study, we have the example of Bitcoin mining and production. So here we have an example of a publicly traded Bitcoin miner. These are companies where the overwhelming majority of their revenue is actually sourced from mining Bitcoin in particular. If you have a publicly traded company, and this company is mostly generating their revenue from mining Bitcoin, it should be that you are able to actually analyze where those Bitcoins are going and how much Bitcoin they have mined. You take the price of Bitcoin at the time when they begin depositing onto exchanges in order to liquidate. And you should be able to, back of the napkin, actually track the amount of revenue that a public Bitcoin miner is producing in real time without needing to wait for example, their disclosures at the end of the quarter, such as, for example, their earnings reports. Whereas previously, before Arkham existed, you would need to wait 90 days for them to actually, produce their earnings report in order for you to be able to know how much money they make. But in this case, you no longer have to do so because all of the information is available on chain. And this is essentially what we consider to be the future of all kinds of, not just digital assets, but assets in general as things continue to move into a more tokenized reality. If we were to look at this example, you would be able to see exactly how the money flows between the different miners, when the coins are being produced, when they enter the miners' wallets, and later on when they begin depositing onto exchanges or to OTC desks or to trading firms in order to begin liquidating in a way that is easily traceable. All of this is super important to us in the industry as a whole, and for this reason, we've continued investing into these kinds of technologies across the globe. But most importantly, we see the importance of continuing to invest within different geographies, and in this case, including Asia. From here, we've managed to partner with a variety of different trading firms, market makers, exchanges, and even companies like Chainlink in order to continue providing the best kinds of on-chain information and analysis for different kinds of players, market makers, and trading firms overall to be able to understand more about what's actually going on within the crypto ecosystem in order to do two core things. Number one, risk management. Obviously, this is super important within the cryptocurrency space. There's been a number of different players that have blown up over the years with people's money attached to it. We see this as a way for people to protect themselves by actually understanding what's going on within the cryptocurrency economy. And then the latter thing is actually using it as a source of alpha, as a way for people to be able to actually make money given this information. Thank you very much. I look forward to chatting with you all soon. And if you would like more information, you should go to arkhamintelligence.com or follow us on our Twitter @ArkhamIntel.